Good morning, everyone. 7:29. Markets for the very first hour are opening up, and we got an Apple chart here in the first hour. What I would like to alert our MMTs to, or people in our trading division, trading capital that is issued, is that when the short comes all the way down and it makes this bottom as it's doing right now, is that we have to have an expansion bottom mathematically to build strength in the price to get back up to the top of where these three diamonds are. Now, at 7:29 a.m., good morning to all MMTs. Building the bottom here and now is what we look at in the name of Apple Computer. So when the short broke right here to the bottom, that's when we started buying what? We started buying the 400, here's the $460 call right here. 990 close, 1075 high, our entry 770. Why did we have to keep the volume entry low? We're still wholesale. There was only a print down there at 730. 794 contracts traded already. You can see how long the list, you can see some of the volumes in here, 20 at 772, 785 by 8. But here, more importantly is that this is the $460 call. It's a weekly, 3-1 weekly. How to trade them, how to get the risk lower based on a support level on Apple when buying a call. And Apple has to do what? It has to build price. It has to build price. Let's take a look at that price level. The price level depths on bottoms is that when you're putting a bottom in and you get down here, you have to maintain closing bars. You want to maintain above this half bar breakout. That started that, and it starts, but it's very weak. Why is it weak? Here's why. The IR is 12, and it's 4.7 going toward minus 0.55. This is the truth in the price right now at 7:31 a.m. So when equities put bottoms in, they have to expand, and we need more green bars at the bottom than the two red bars we're seeing now. So what will have to happen is this IR will have to get above 25. 44 better go below 40. It can't keep going toward the higher delta range because that's when you get price weakness at that line. Each line is 64 cents per 1/16 right here. They change every day. And you can clearly see how they're selling the equity down. Here is the call. 990 on the close, 1075 on the high. So it is a markdown, which makes the risk less, dollar amount risk is less, and volume, lower volume, 3 instead of 10 or 20 or 100, is that the stock has to prove itself on the intraday hourly opening bell. And people are selling Apple. From 485 all the way down here to 454.49. And here are the calls, 760 by 765. There's 826 volume. But the problem is we're not breaking higher. We have to consolidate that two teeny range times 64 cents in the bid and ask levels. So these next order entry on this particular call would have to be marked down. If it's going to really get on wholesale and it's down toward the lows, that's the premium based on the price range, 735 by 745, 730 by 740. Remember, retail was 990 and 1075. Down here, it's still at the lows of the contract, and we're 8 IR, and we're coming right back to test this double bottom low in the equity. Look, right here. So this is that bottom, and it all started at 7:34 a.m. Pacific Standard Time. It's all right here. You can see that 48 is going toward 55, and you broke down 6 minutes to test the lower diamond area. Remember that this lower IR naturally is going to mark down the bid in the call side over here. And now the low is going to be coming in jeopardy. So what I am going to do is the following. The bottom is being broke. I'm going to limit out 2 of the contracts right now, and I'm going to keep 1, and I'm also going to bid my next entry level on these contracts at $5.80, because that would be the next price level that we would buy it based on the fact that the bottom hasn't been totally breached yet. But when we're this close to it in price, we tested it. We have to have evidence in the next bar that it has to be green like this. In order to validate the intraday open hourly range plus 6 minutes. So you got 1 hour and 6 minutes between the high frequency trading machines that are used and public. Why are you going to keep a stop? Is because the next order in here is going to be 725. 580, 570 bids. The exit order out, if we do put a bottom in, we haven't got evidence of it yet, but we'll still keep that other contract, and we'll keep it out there to sell at 950. As we go through this bottom pattern on Apple on the opening bell with our new trading division attendees, our pleasure to bring to you trading. Here's an email thing if you're serious. Here you just put in your referral, Titan Equity. That's for your trading account. Okay? And Titan Equity offers people the services. When you go to trading, click open an account. Here. Go through here. Everyone already knows this. All of you people with accounts below $25,000 are handicapped in a couple of different ways. On an intraday level, you don't have enough capital above the required amount in the USA anyway. That requires people to do that, and the USA broker-dealers have to do that. The setup with Titan is that you're trading and you will have an agreement with them, and you'll find out all of the details directly there. And that's where you would, always simply go open new account tab. Right here. The people that suffer, look, it takes money to make money, so you get the money to power your order entries and exits. Okay? This is what you're going to get. You're going to get direct access to the floor. You're not going to have the $25,000 pattern day trading rule, meaning that Titan Equity and your, arrangement with them will keep those balances above that based on the order power, buying power. There are lots of, most traders deal with what? All the online discount brokers. That's a real pain in the butt because of the execution model to the exchange and getting filled in your orders, and you know exactly what I'm talking about. You can say goodbye to it today. You can say goodbye to it today. All you have to do is get in our free trial. And how do you do that? You simply go to trading. That's the home page. You go down here. Look, You go down here to SMF Stock Exchange, you click on it. Once you click on it, takes a while to load the page. There's a lot of live trading videos in here, just like we're doing on Apple right now. Look at here. Read what the page has to say. There's an exclusive one-day trial. Click on it. But once you do, you have to do your online forms, and then I have to talk to you anyways before I let you in. Here are all real live trades that you can witness. No one else has those witnesses, just like we're doing live right now. And we're always updating the trading division. So take the time to reward yourself and get involved. Right now, we're in a new bull trend and have been. And it's time for the people, if you were washed out in the market before, that's why we have the trading capital. It's time for you to come back, and it's time for you to use our program. And our market makers will be the ones giving out the orders and the stops and the exits, period. That's what they'll be doing. There are different services. Go to HFT, High Frequency Trading Courses. Click on it. And what do you have? Watch the trailer. Click on it. You'll see what the hardware side of a lot of that is. So back to Apple making a low, and back to keeping our risk lower, because the bottom is a long-term bottom in Apple. You can see it here. Look at this diamond. It's a bottom from the short, but it's weak. Why? That's at 12. And that 45 has to go below 40 for this bottom to get stronger. So when you're buying on the lows in an equity, things have to mathematically change. This one here is for, I've got all the ranges for you right here in the MMT Market Maker platform. Look at here. The intraday range right now is 8.24. It opened at 461. They take it to 462.73 to the short. Here. Look at here. $6.48 off of the high. Again, reversal. Off of the high. Off of the low, you're $1.54. Each line is 64 pennies per 1/16th. Like it was in the old days. Everything was done in fractions, but they equal a penny amount. That's how accurate each line is at the bottom. We're looking for expansion. It's a live options trade. You can't be heavy on this volume until this thing is totally sold out, because of the weakness here and because of the weakness in our TR. That's our market maker bid and ask trend ratio. When you print lower, the stock holds support. If you print toward 55, like 44 or 48 or 50, then you're going to come down to the lows right here. You're going to come down to these lows. And you got a 16 IR, but it's a weak reading as far as price goes at the bottom. That's what it is. And it's done in mathematical calculations relative to high-frequency trading algorithms that have mathematical buys and sell scripts. How do you monitor where the sell scripts were here? When they cross the bid, see, Apple's going to be in a trading range for a long time, and it's not going to trade like it ever did before. No. It's going to have a different value investor coming into the name. The old days of the real hypes are gone for quite a while. This thing is going to have to put at least a 3 to 5 month bottoming process. Well, 1 quarter plus maybe a half a quarter. So a quarter and a half. So what's that going to be? 4.5 months on going through various tops. But the tops are always going to sell down. And they are. And what does it mean? It means that the puts are getting marked up again. They marked these 470 puts when it hit 462.73 right here. These puts paid off the bottom. The high was $11, and they mark them down cheap enough. They're 15.40, and this is a 222 now. That's the weekly one on the put for this 4-day expiration. You can see the value. You can see the call chart right here. This is the one that we're trying to buy based on this stock holding support. 1075, 990, 725 is a low. It doesn't matter. What does matter is how the bottom is put in and how deflated the lower end of this call chart is going to be. Remember, just not long ago on 211, they were $29 up here on the high. So we finally getting down here. This bottom over here was 545, and that was on 2.5 of 2013 MMTs. That's your price. All right. So there is a couple dollars below this area, but we're not buying an inflated call value. We're buying the market maker alert called wholesale dollar value relative to risk from the markdowns. 1075, 725. Do the math. 350. Look at here. 780 to 990. What is that? 200 pennies. Right here. Markdown. And then he made another lower low. And we're not going to let it go any lower than 7.25, period. Period. Why? Let's go back over to the other chart. And there's that put option. I'm going to verify it right now. And how am I going to verify it? I'm just going to take a look at something. I want to look at a March. Oh, no, it'll be just a regular one. I'm going to want to look at the 4. Let's see. There it is right there. That 465. I'm going to throw that in here. I have a 680 low and 1150 by 1170 high MMT. So when we get sold out over here, these are going to peak in value, and they're pulling back off of their highs right now. That's the 465 4-day expiration weekly that we'll be looking at. Getting at some point in time, the 470, this is the mark to mark, $10 on the low, $16.50 on the high. What was that based on? Let's be clear about this special, because this is for our new MMT that's coming on board, and we didn't want him to miss this trade, but we did want to have the live bottoming process and what the price means when that IR, see, you're going toward 55. This is what I said, and we're right back down here at the bottom. Mathematically, 64 cents per line. You can see it here. We can see it together. Now, what I will do is I'm going to conclude that bottom. I'm going to say that we're 750 over here by 765, and I'm going to say that the 470 put, which was in the money, was marked down 200 pennies wholesale, and then trades up here to 1650 based on this reversal. And how did that put option work? It was because of this. Right when you identify that reversal bars, they shot up here, it looks like, on the high. But then that big reversal, if you're watching that as that's happening, you get these down and you get the bottom in, but the bottom is still at risk. That's why the next entry over here, even though we have one contract of 3, because we weren't going to let it go, the other 2 contracts, we weren't going to let go below 725. And it's very hard to keep a stop on it, but that's okay. Our next order of business is going to be $5.80 on the next entry. The equity has broke 343 lows MMT. Once again, I'm going to conclude the video, and I hope that you all find yourself right here on the pages of stockmarketfunding.com so that you too can share in wholesale entries and retail exits and the stop management to protect risk with the lower level based on the short side, and the put side is breaking the highs, and we're still holding down here. It made 715 from 990. So I'm going to conclude this and we'll deal with this. 5.7, that order could change anytime. I could cancel it in a heartbeat. But we reduced our risk by 75% only for one reason, because there is a lower market that we can buy, and we can let these bottoms set themselves up. But you can see that we're breaking the lower bottom in the MMT platform. And how do you know that? You're at 1 IR, pal. We just now broke that ratio, went to 58, and that's why the price continued to go down. There was no lag. There was no lag. And that was the other reason why we exited out of 2 contracts. Not because these bottoms are going to have to prove themselves. Okay? So, the contract makes another low, $7.15. 5.7 is the next entry. 7:50 a.m. Pacific Standard Time, date 2/19/2013. Subjects, prices change, market maker alerts. Get your trading capital, get in here and get busy.